It's from Megan from Fort Myers. If you owe the IRS money, how does that affect bankruptcy? Is it dischargeable, non-dischargeable? Can you still get audited? And do you have to give your tax refunds to your creditors? So there's a lot in this thing. Let's just hit it one from the start. When you're dealing with the IRS in bankruptcy, the first question you have to ask yourself is it a Chapter 7 or is it a Chapter 13? Then you have to get into how old the debt is, whether or not the tax returns were timely filed, were the tax returns reviewed by the IRS, and was the assessment done, and what's the amount of the debt? I mean, there's just a ton of information. And then you got the 940s, the 941s. Anyway, general rule of thumb. People think that taxes are non-dischargeable in bankruptcy. I would disagree with that general rule, and here's why. Certain taxes are dischargeable in bankruptcy. When a debt gets beyond a certain age, and if you've done everything right, like filed your tax returns timely, the assessment was done, you've met the criteria of what needs to be done, that debt loses its priority status and goes to what's called an unsecured non-priority status. If that's true, that debt is a dischargeable debt, and it falls into the same category as, let's say, a personal loan. Let's say if I gave you $10 and there was no promissory note or anything, it's a personal loan. That's an unsecured debt. There's no collateral between us. It's the same thing as a credit card or a gas card, or maybe store credit cards are a little bit different, or even a medical bill, or let's say you have some other type of an account where there's no collateral securing the loan. Well, then that would be, the IRS debt could fall in there with it as well. So in that type of scenario, yes, the IRS debt would be a dischargeable debt, and it can be included in a bankruptcy proceeding. So then you look at it and say, okay, how does that affect your bankruptcy? Well, IRS debts don't affect bankruptcy. They're taken into consideration, just like every other creditor. And as a rule of thumb, you can always say that if you owe the IRS money, the debt has to be included. There are no debts which are excluded from bankruptcy. All debts are included. Some debts may be non-dischargeable, like student loans. Like, let's say you owed IRS taxes for personal IRS taxes from 2009. That's such a new debt with the IRS, it would be considered a non-dischargeable debt. And let's say you come to me and you have this IRS debt. Well, looking at it, I would have to make a determination what's in your best interest. And I would talk to you about this and say, look, folks, this is a debt where you have to do a Chapter 7, and you can wipe this debt out. Or you may want to kind of manipulate things a little bit. Let's say you do a Chapter 7, you wipe out all the other debt, then you come back and you do a Chapter 13, and you say, well, I'm just going to pay off the IRS. This is a strategy we've employed quite often for a lot of individuals who were eligible for the 7, but they would have had to pay back extra in the Chapter 13 had they just did the Chapter 13. Now all the naysayers are going to say, well, why would you file 2 bankruptcies? You're not allowed to get 2 discharges in that short of time frame. And I say, right, that's correct. You get your discharge in the Chapter 7, wipe out all the other debt, then you go and use the Chapter 13 to pay back your IRS with no interest, no penalties, and you don't get a discharge at the end, but who cares? You don't need a discharge. This was a non-dischargeable debt anyhow. You're just using the bankruptcy process to pay back the IRS in a fashion which is comfortable to you, and you have court supervision. Plus, you have no interest, no penalties that the IRS can tag on to you. By the way, that's on a debt, that's an unsecured priority debt. If the IRS has a lien on something and they become secured by some collateral, which we're going to get to in a second, then they do get paid with interest. So let's go to that one. The next question, or next part of Megan's question was, can I still be audited in a bankruptcy? You got 2 different things going on here, Megan. An audit is one type of process that the IRS uses to basically make sure that your tax returns are correct. Now, there's a lot of different definitions. I'm not here to talk about that. We're here to talk about, let's say, for example, the IRS audits you because they don't think you did something right or you took too many deductions or whatever. It doesn't matter. I got a caller coming in. I'm going to break from that in 1 second to take the caller. Let me finish this thought. Bankruptcy is another. So if you're in a bankruptcy proceeding and you're paying the IRS back and you get audited on the other side, the IRS can still look at your paperwork without trying to collect the debt.